Hey everybody, Preston Brent here with our Trader User Group Weekly Roundup. This is for the trading week ending February 23rd, 2018. Well, last year, I think we only had, about 8 1% moves in either direction for the entire year. And we've already had, I think, about 12 of them this year already. So that shows you a little bit about the volatility stance. Now, we've had this 10% correction. What I've got on the screen right now is a daily chart of the E-mini S&P 500 futures. And, this week, it's been not only has inflation introduced itself to price action, but the bond market has reacted very quickly and at many times about a week ago violently to a fast move up in the 10-year interest rates. And it was the speed of the movement that I think really shook the market. This week, we've had a nice bounce off the correction lows around 25, 29 that we made on February the 5th. And you can see that we finished actually up for the week. But now it's going to be about debt versus equity. The higher the interest rates move, the more debt market is going to compete with the equity market for money and cash. So we're going to see how this thing plays itself out. Now, today, we had a huge move of over 100 points in the Dow in less than an hour or so in the middle of the afternoon. We're getting all these reports from the Fed governors. We had a lot of them speaking today. And every single one of them seemed to indicate that rather than possibly 4 rate hikes this year, that's kind of what the market was fearful of, the Feds have come out and been basically more dovish than their FOMC meeting minutes, which, said everything in the tizzy a while back. So I believe the markets now are going to slowly come back into line. We also had the volatility VIX go back into a contango environment, which means the VIX is lower than the front month vol futures. Not by much, but that's reduced a little bit of the fear in the market, although we still got fear, and it will not take much in the 10-year interest rate to get back up near 3%. And if it moves quickly, we'll see a quick push down in the markets. And again, the markets are not as concerned with 3% as the speed with which it moved off the lows. And we had a little bit of a pullback in the interest rates in the latter stages of this week. So now what are we looking at right now and for the rest of the next week? You can see here on this chart, and let me just draw this in. From here to down here, it was about a little bit more than a 10% correction in the S&P. We had a double test here, but it happened so quick the MACD did not have a chance to address it. On a 2-hour chart, it was an easier trade to take, but on a daily, it was not once we hit this. But then we've been moving up in a nice little pattern here. And I've told my members that what I'm looking at is I want to clear this area right here. Right in that area is what I want to clear. And we've been in and out of that area now, going all the way back to this bar right here. So we've been here for 6 trading days, okay? So for 6 days, we've been sitting here. And why is this area important? And until we clear this area up this way, then the markets are still susceptible to falling back down again. And I showed you this last week. But you can see this 7.71% move up off the lows here. It's 195 points roughly. Why is that important? That was the exact move that was made in February of 2016. And then when it hit this level right here, the markets paused for a few days and rolled back down and tested the lows made in February of 2016. Now, if we go back in time, and I'll show you again because I've done this with my members a couple of times, but it shows you the symmetry of the markets, right? Let me just swing on back here. I probably could have gotten there an easier way, but you guys get the idea. You can see here in this market, we had a high, a lower high, and then we couldn't get back up to the highs that we made back here. So we just kept making these lower highs just like that. And you can see the MACD just constantly going lower and lower. And then we finally gave it up. And back then, you can't see it, but we fell over 14.6%. That's a nice move to the downside. This time we only had a correction of about 10%, a little over 10%. Okay. Now the markets moved down and then it bounced up, and the height of the bounce was right at 7.71%, 7.7%, right? Right up there, and it created that very strong resistance area here. Key pivot right there and a key pivot right there. And then you can see here that from that level, we came back and we made a new low right there. And you can see the symmetry of the boxes, the width of the boxes are very similar. This one, in fact, is just a little bit wider than that one, but we came right back down. We made a new lower low. We got a signal to go long, and that's what we did. And that long took us right up to that key level right here. And we hung out here for 4 or 5 days, a little over a week, and then we finally cleared it right there. So now the question is, because markets are very symmetrical, are we going to experience one of these again? Well, the key is looking at the pivots that we established on the way down. So if we come back and look at these pivots, remember, this was the exact same move that we made in February 2016. So let's go look at the pivots here, and I'll show you. Here's where we are, the exact same move. The points are larger because we're at a higher price level, right? But there it is right there. So the points are a little bit larger because we're, as I said, higher. But you can see here that 7.71% puts us right there, okay? Right in that area there. And give or take a little, this is the area I want to clear. You can see volume over price also right in that area there. We got very little volume here, and then we encounter some more volume up at this level around the 2800. So if we can clear this area, then the odds favor us dramatically, because you can see right in that level right there, there's a resistance point, and it's a psychological barrier of around 2800. I am not, and I don't encourage any of you to get too melancholy here with this move higher. All right. I mean, this is kind of the box that we're sitting in, and it would be nothing for this thing to come up, lull everybody to sleep, and then just give it all up and then come back down and test this new low here in another symmetrical move, very similar to what we had before. So that would give us, one of these kind of moves where, we're up here, and the next thing you know, we come down and we make another down move like that. So that's what I'm watching for. And this move right here in this area, I want to clear the 2673, which is a key pivot that I want to get north of. You can also see another key number here on my chart is the 2018 open price of 2675.25. We want to stay north of that. Now I'm telling our members I want to stay north of the 50% fib extension, which is right at 2704. And you can see it's kind of been holding us up here for quite some time. And also I want you to notice, I'll blow it up a little bit so you can see a little bit better. The red line's the 50 EMA. And you can see here all of the closes right here. We had one close here, and then we quickly got right back up again. So we only had one close before below the 50 EMA, but we quickly got back up here again. And we're up near the 61 extension off the lows. So this is what I want to see, but that is the key pivot for me. That's what kind of precipitated everything. We got a little minor pivot here in this one right here. And then that 7.7% level, I want to clear it. Once we do that, then I will feel much, much better. Until then, guys, we must be very careful. Because if we look at the other culprit in this is the 10-year interest rates. Let me just find it here on the screen and pull it up for you guys. Here's the 10-year interest rates. You can see here, as I told our members, I said the 10-year is going to move into this zone right up here. And I said, when we do that, it's going to be ugly for the markets. Now, we've moved up, and notice the past 2 days, we've actually eased off a little bit. You can see here it pulled back the past couple of days. But it's a daily chart. There is no divergences in that pullback on this chart. None at all. So that suggests that any move down here is just going to be more of a consolidation, but before we move back in here again. 3% is kind of like the magical number. If we can stay below that, that'll be kind of a lift for the bulls. Or if we just grind sideways within a tight range, that would also be good. If we look at the bond market, now I shifted from short to long in bonds. You can see here where bonds actually made a new low right here, and it's still ugly. And I said interest rates are probably, if they hit that 3% level, bonds are going to be down here around the 141 area. Today I played bonds to the upside, just a little bit of a counter move. But there is no divergences here. That suggests that any move higher in the bond market, if we move back into this regression channel right in that area there, we're rolling right back over again. And that would suggest that interest rates will consolidate for a while, maybe pull back, ease off a little bit, and then go back up. And that is the action I want to watch and see what the equity markets do when that happens. Folks, this is where the action is right now. We got to watch it very closely. Most of this past 2 weeks, I've been short the bond market, okay, or selling bond futures and selling out of the money puts against those bond futures, and selling some calls too out of the money in the bond futures. And it's been a nice trade, but we're going to watch this very closely. The other thing that I'm looking at, and we need to follow close, is the volatility. It closed at 16.49. Notice we're still in zone 2. I said we can stay in zone 2 for up to 30 days, several weeks, and it's just going to float here because the market is still very nervous about any kind of shift to the downside. It's going to keep volatility elevated because in zone 2, that's also good for some of our credit spreads and some of the other strategies that we deploy. So it's good for an option market, but you got to know what you're doing because you can get blown out of the water with a vol spike like we had back on February the 5th, and it can get ugly. So we're in zone 2, which is where the VIX is greater than 15 and less than about 22. And I'm watching this very closely here. So these are the things, and vol futures, the front month vol futures is lower higher than the VIX. So that gives us back into a contango environment, but we're still elevated. So don't forget that. Okay, we're still elevated. And the other aspect of all of this is the U.S. dollar. If we look at the U.S. dollar here, it was up just a little bit today, but it's an ugly chart. We got a little bit of a bullish divergence here, and you can see it working itself off. We're coming into this resistance zone here, this colored bar. I think any move higher in the dollar is probably going to be sold off, much like the same thing with the bond market. Okay, this dollar is not a vote on higher interest rates. It's more a vote on the debt that the U.S. markets are carrying, and money may shift to other countries, especially emerging markets. With a lower dollar, emerging market is a better bet for some trades. Okay, for our members, we'll go through some of those examples. You can also see the yen has just made a humongous move off the bottom. Remember, the yen in times of safety, money seeks the yen. And you can see this obviously is where money went. It went into the yen. So, and you can see we broke out of this tight range here that we've been in for quite some time. All of these things and here's the range right there. All of these things set the mood for a little bit more global turmoil with these interest rates. So we've got to be very careful. I mean, don't let this move up lull you into believing the worst is over. We've got to be careful, okay? So that's what I'm looking at there. And then, of course, if we look at gold, you know, you'd never know here, gold. I mean, with the big move down in gold, what did gold do when the markets were moving lower? That's what gold did. It shot lower. Now, we had one big move up, but now it's come right back and pretty much given it all up again. I've been saying gold is going to come back around this 1300 to 1310 area. And if it breaks that, it's going to come down and test the 200. Gold's not ready to go higher yet. I am still on my thesis of calling for, in a macro perspective, 35 to 40% bear market to the downside, the end of 2018 or generally in the next 12 to 15 months. I had called that about 6 months ago, but I believe the end of 2018, 2019 area is when we're going to get hit. I think near term we could experience a little bit more euphoric action in price, but it's going to be a much choppier year this year than previous years. The other thing that we're playing here, obviously, is let me just shut this down. The other thing that we're looking at is oil. And you can see oil is bouncing up off of this 2018 low. We had a 10% move up, a 12% move down, and now we're kind of sitting in the middle here with oil. I don't think oil is going to come up and hit the 2018 high price again for a while. We're going to chop around here a little bit. I think oil is kind of trying to find its new equilibrium with OPEC versus Shell. We had a lot of big money get caught long oil. And they had margin calls and many other trades, and they had to unload because oil got too top heavy with too many longs. And then this was a big unwind. And now we're just kind of gradually moving back up to about that 50% level. And I think we're going to chop around here a little bit. We did have a surprise with a drawdown in oil inventories this Thursday. But I do believe it's going to have a harder time moving a little bit higher. All right. So now for our members, we're going to have our session tomorrow night, Saturday night, rather than Sunday night. So I will see you 8 p.m. Saturday night. We'll take a look at the trades. We'll take a look at what we're doing in Secret Trader. If you're a non-member, I highly encourage you to come in and check us out. We're running our Option Masters education series. It's probably going to be 200 or 300 videos at least. We're kicking it off. It's really a lot of fun. Got a lot of global participants in this from all over. You ought to check it out. If not, I think there's an offer here for that, or as a member of our group. We're having a lot of fun. I think 2018 will be a great year. All right, everybody, have a really great weekend. Members, I will chat with you guys tomorrow night. Take care, folks. Ciao.